You might be wondering whether or not that the stock market crashing is a good thing or a bad thing. Now, those that have been working in Wall Street or in the finance department for a long period of time know that it is not really a crash yet. I mean, there's recessions, but what we and many others that have been doing investing for a while call it is that we actually call it Christmas because everything is on sale as a result of a psychological financial term known as panic selling. Now, what a panic sell is when the entire market, such as a stock of a company, say the tech sector, and all the stocks just go down. Whether it's the tech sector or the S&P 500, everything goes down. Now, some people think of that as a bad thing. That's actually better known as a correction. And a lot of people that have been doing trading for a long period of time, especially Warren Buffett, wait for moments like this because the key is waiting in addition to being in the market for a long time. And the benefit of waiting is you are now, if you were to buy it right now, you would make more in 5 years versus if you bought it a year ago or 6 months ago, or sorry, let's say a year ago, because it's the market's been down for the year. And that's one of the reasons why Warren Buffett keeps 30% cash on hand, is he is waiting for prices to go down because he doesn't want to buy them at normal prices. He wants to buy them at a discount. So when people start panic selling, that's when he swoops in with his cash. While cash does go down a certain amount of percentage per year with inflation, which is high as it is, the returns that he gets are in double digits, if not more. So inflation is only in a single digit, where the returns are in double digits. So if you're patient, make sure that you do things like that. Warren Buffett, for a good reason, keeps 30% cash on hand because he is simply waiting for moments where people call it a crash, some call it a correction. To people that want to buy piece by piece by piece and just kind of play the risk on 100 stocks, they call it Christmas because everything's on sale. And if it's at the last quarter of the year, hey, how convenient. That literally is around Christmas time. So it's Christmas for traders or Christmas for long-term investors when the market goes down. And if you look at the market over the last 5 years, it's still up. So you're supposed to hang on to a stock for 5 years or longer, 20 years. So even though the taxes stop at a year with capital gains, it's important to make sure to look at it in the long term. And when the market's down, that's the best time to buy. If you had bought from the market at the fall of the pandemic and waited 6 months, you would have made a fortune because everybody had panic sold. Same thing happens now. People panic sell because they've lost confidence or because the masses are doing it. They see something in the news. The news don't really, that's just whatever. I mean, people were worried about the Fed, but if you look at returns, if you were to put $100,000 in cash into the stock market right now, diversified, well-risked, then, or index funds, imagine what that would be worth in 10 years versus if you had bought it 12 months ago and then waited 10 years. You'd have a crap load more now because that drifting time between a year ago and now is down. So that's your profit right there. That down part is your profit. That's why you buy low and you sell high. I hope this is helpful for you. My name is Lex the Illusionist. Make sure to hit that subscribe button. And thank you for watching. And I hope to have some more amazing tips for you soon. And remember, Warren Buffett's favorite holding time is forever. Thank you.